Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Discover Your Trading Styles. My name is Shane Chu. I'm the moderator for this session. I'm sure how many of you here has already decided what kind of trading style you want to go forward with? Because if you pick the wrong strategy, if you pick a wrong style that doesn't suit you, then maybe the result could turn to be a disaster, right? So it's very important for us to understand ourselves so that we can pick the right strategy that works fine for us. Today, we're going to discover different styles in trading, and then we can assess which style is more relevant and more suitable for us. Now, before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you are solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He graduated with a bachelor's degree in mechanical engineering and has more than 20 years of experience working in the oil and gas industry. Now, he started his active trading journey in 2014 after the completion of the Beyond Insights program. And since 2017, he has been coaching over 1,000 students in the foundation programs. Currently, he is also one of the program managers helping with program development and enhancement, particularly in the intraday course. So he's none other than Mr. Kut Poon Kiat, who is a senior trainer of Beyond Insights Investment and Trading Education. So pleasure to have you here today, Kut. How are you?
I'm good. Thank you, Shane. Yep.
Yep. So we can't wait to learn from you today. So I shall pass over the control to you.
Okay, thanks. Let me take over the screen and I'll share my slides. Okay, all right. So great to see. Okay, I can't see all of you, but great to have all of you here together with me for this session. All right. So the topic today is talking about the trading styles. Right. So how many of you? All right. I have the chat window nearby myself, and I can see if anyone type or message me. So yeah, just want to get to understand you. How many of you understand what does it mean by trading style? Right. Okay, or such word doesn't exist in your dictionary and you just do your business, trade or invest based on what you understand. Anyone knows what we mean by this trading style? Okay, hang on, let me just see. Yeah. All right. Okay, so probably not many people. All right. So let me just explain a little bit about this. All right. So in Beyond Insights, we have actually mapped the whole financial, well, all these parameters. And trading style is one of the things that you have to decide when you want to invest. So of course, you start off with this one first, the asset type. Whether you want to be a stock trader, currency trader, commodities, trade in gold, like what I saw in the Bursa advertisement, trade in dinar, or you want to trade in bonds. Then you have to decide whether you want to trade in Malaysia, trade in Singapore market, or whatever. And then you move on to your trading styles. Are you in this? Are you going to buy and hold for the long term? Or are you going to do mid-term, short-term, or buy and sell within the whole same day, which we call intraday trading? All right. Then, of course, linked to this, you have the respective strategies, okay, which we're going to cover later. All right. So, never mind. Okay. So I can see from Linda holding pegang satu counter. Okay. All right. And thank you very much, Linda. All right. So we'll talk more about that later. All right. But let's move on. So generally for retail investors, people like you, myself, I'm not a professional investor, which means to say I don't work for a financial institution to buy and sell, trade for them. I'm actually like you. I buy and sell, trade for myself. All right. So we are called retail investors or traders. So generally for us, there's 4 category of styles that you may fall into. All right. So let's just say, for instance, if you do long-term investing, then you'll be buying and holding for a long time. All right. Just like planting durian. You can see up here, planting durian. You plant the durian, you wait for a few years, then the durian mature, and then you sell durian, you make your money, right? So then also we have the mid-term, short-term, and intraday, which I'll go into the slide. right? And you can see here also the time required for different style is different. That means how much time you need to spend to operate this style. So let me go to the slide to show you. Okay. All right, yeah. So if you're a long-term investor, so Linda, you may fall into that category. Then you are one who buy, and then you hold a position long, long time, maybe 3 years or more. And the longer, the better. Why? If the stock price go higher and higher up, then the longer you hold it, the more money you make. Okay, yeah. So that's long-term investor. Then how do you make your money? Well, you either make your money from the dividend growth, right? So maybe your company gives you dividend, right here, or when you buy the stock price was very cheap, and then after a few years, the price grow. We call that capital growth. Whatever it is, you need patience. You need to let your investment take time. All right, you cannot say like, I want to invest now, then next week I want to sell, or next month I want to sell. No, it doesn't work for you. You will not make money from there. Okay. Now, the nice thing about investing is it takes only roughly 1 hour per month or maybe 1 hour per week. Depends on how active you want to be. All right. So it's a very lifestyle, relaxed kind of activity for the investor or for those who choose this style. So if you are a very busy person, you come back, no time to eat, no time for your wife and children, no time for your own exercise, maybe you want to look at investment. All right, good for busy people. Okay, all right. So broadly, there's two categories of investors. Okay, so maybe you have heard of this, value investing. All right, value investing here, value investing. So value investing, the most popular guy, as you can see, our handsome investor uncle here is Warren Buffett. He is the one most popularly associated with value investing. Right. So his style is if you want to buy one company, you want to wait for that company, the stock price to be deeply discounted. That means the stock price must come down, come down, come down to very cheap, and then you buy it. You don't buy immediately there, right? Yeah, and then of course, when the stock price rise up, all right, then you make your money. Okay, and to do this, you need to have patience to wait for years to buy. Like for instance, our uncle Warren Buffett here, yeah, he has to wait roughly from 2 years before he buy a new stock, or well, I think the record shows up to 7 years, just waiting, nothing to do. Read annual report, check 7 years to the next one. See? Yeah, so ranging from 2 to 7 years. Right. So if you have that kind of patience, well, maybe you can be a value investor. Right. So that's one way of doing investing. Another way is this growth investing. Okay. So growth investing is like this. You look for high growth, good stocks. Okay. But you don't need to buy it at very cheap. You don't need to wait for the price to drop, 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 and then buy. All right. If you look at it and the valuation is okay, you can just buy now. Right. So companies that falls into this, good growth companies that falls into this are like Nvidia, Google, Meta, Amazon. Right. You see, Uncle Warren Buffett doesn't buy this because these are good company, but the price never come down to the level that he wants. He only managed to buy Apple. All right. But Apple itself has made him a lot of money. But for this company that is very hot in the market now, he needs to wait for them. Okay. But for growth investor, no. All right. They can just buy when the market dip a little bit. Okay, we call it market correction. Buy when the market corrected a little bit. And after that, when the price recover, go up, you profit from there. All right. So this is the two main ways of investing. Okay. So maybe I want to ask you all, and then you participate in the chat for me. All right. So how many of you, okay, hang on, let me just pull over my, okay, so let me just check. Okay, so I have a question here for you. Yeah, so who has a busy life and you think investing actually suits you? So I will launch a poll, ABC poll, hang on, ABC poll, and you just click A or B or C, depending on what is your answer, right? Yeah, so you should be able to see a poll, A, B, C. So only choose A or B, no C and D here. Right, okay, so let me just pull the answer here. Okay, can you see the poll result here, which is moving A and B? Okay, can you just type on the chat and tell me yes, can see or cannot see? Anyone? Just type on the chat. Yep. Cannot see. Okay, cannot. Okay, no problem. All right. Okay, so in that case, what I'll do is right. I'll just tell you the answer. So, well, there's something like 20 of you who says that you are very busy, okay, which is A. All right. So investing is good for you. And then, but more people says that, yep, you can have encourage, you can spare more time, which will go to the next styles, you see. Right. So very good. Okay, very good, huh? Right. So yeah, so if investing is something which you need to do because you're very busy, yes. Yeah. So invest, yeah, you need to learn the investing method. Okay. Now, so what is good about investing? Uh, well, it fits your lifestyle if you're a very busy person. Then for investors, compared to those active trading like trading, okay, which we'll see later, investor normally have higher success rate. Normally, yeah. All right. So if you learn the proper method, you do it correctly, yeah. Well, I would say that your success rate can go as high as 70%. That means 10 stocks you buy, seven you make money. The three you don't make money is okay. You cut it off, you don't lose much, and the seven will make way, way more to cover those losses. Right. So very good return, sorry, rate of success. Right. Then what else? Okay. Then good for people with sorry, with no time, then generally it's lower risk. Right. Generally it's lower risk. But the bad thing about investing is the return, or well, the speed for you to grow your asset or to grow your wealth, your money, is also a bit slower. But of course, it's better than bank or even EPF, right? Which I will show you later, right? So then the other thing is, as investors, you need to be like Warren Buffett. So you see everything behind him. These are all the reports from the company. He needs to analyze and get the good company. So don't invest in the wrong company. Otherwise, you won't even meet 70%. Maybe it's just 10% success rate. Then the last one is, because you invest for a long time, 3 years or more, your money is held up there in that stock, so cannot move, right? So some people don't want, they want to rotate their money fast. All right. Okay. Yeah. So this is the good and the bad. Right. So for you investors, well, that 20 of you, okay, 24 of you. Now, what are the common mistakes? Well, normally it's risk management. A lot of investors, because they don't do it the right way, what they do is that if I have 10,000, 5,000, or 2,000, that's everything I have, I put it into buying one single stock. If the stock goes up, good lah, you make money. If the stock doesn't go up and goes down, I tell you, that goes the whole of your capital or the whole of your fund, right? So yeah, you have to have good proper risk management. Then the other one is so diversification. So you need to buy a few to diversify, so that something happened to this one, overall the rest are still making money. You can chop off this one, right? Don't put all your eggs into one single basket. Then some of you like to do investing, but you never go research more about the companies, so you select the wrong company. So that's also one of the mistake. Another one is sometimes, okay, so you also need patience. You can see here, patience. Okay, you need patience. So some of you are very impatient. You want to be investor, but you're not patient. You buy, then next week you want it to grow, and then you can sell it for money. So that will not, that doesn't make you an investor, right? Then the last one is holding power. Sometimes you have money you put inside, then the next moment you say that, hey, I need my money for my business. Then you take it out. So like this, your durian also kind of grow because you can dig out the durian. Yeah. So these are the pros and cons and the more common mistakes for investing. All right. So for the 24 of you, if you say that you're investor, take note of this. Yeah. Okay. All these are things that you need to do. Okay. Let's move on. So the next one is, okay, so now we move on to trading. So the way we separate investor and trading is, investor are people who look at the company, believe in the company, and they invest long term. Traders, they don't really care about company. Yes, they still want good company, but the love on the company is less. It's just like some people are dating. Some people date, okay, to make that person the husband or the wife investing. Some people date just for fun, okay. While the fun is still there, then they still stays with the person, the other party. When the fun is over, then they say bye bye. Yeah. So trading goes into, well, that sort of behavior now. So you only stay with the stock because the stock is going up, like this one. All right, this is YTL power. You can see, wow, YTL power goes up. Okay, you buy. Maybe you buy somewhere around here. Yes, nice. So while the stock is going up, you stay with YTL Power. Then when the stock says, oh, I come down now, then you say bye-bye, that's it. End of my relationship with YTL, right? Yeah, so normally for midterm trend traders, all right, you hold it for months, maybe 1 year, 2 years is also quite rare, all right? Yeah, 2 years is also quite rare. And after that, you say bye-bye. Then you move on to another one. All right, yeah. So one of the popular trading style for midterm is called trend trading. So, and that one is just like, you can see this picture of a boat. When the wind blow, okay, the wind is blowing here now. Okay, you stay with the stock. When the trend ends, the wind ends, then you say bye-bye. You go and move on to another ship. All right, yeah. So, okay, so compared to investment, all right, it's also quite lifestyle, okay. Not as intensive as what I'm going to show you later, but this one needs you to look at the chart more. You need to be proficient with the chart, look for entries. The earlier one, you also look at the chart, but it's more important for you to also analyze the company. All right, so that's trend trading. Anyone can associate themselves with trend trading. Hang on, let me just pull out the poll. Anyone associate themselves with trend trading? Okay, hang on. All right, sorry. Okay, all right. So that's my. So anyone associate themselves with trend trading? Let me just click the poll and relaunch. Yeah. So me, A means you know, hey, I'm a trend trader. B means I think I am, but not sure. So not so sure. C means I know it's not me. So tell me. All right. Okay, I can see the result. Okay. Okay, many of you actually surprisingly thinks you are, knows you are trend trader. So a lot of people say A. And how many percent of the participant? Let me just see. 40 odd percent of you. Oh, very good. And many of you also think you are trend trader. So you are in B. Okay, not very sure, but you think you are. All right. Only 18% says that you clearly know you are not trend trader. Okay, never mind. I have other styles for you. All right. So for those who think they are trend trader and definitely know they are trend trader, let's talk about the common mistakes so that you can be aware of this and then you can do it properly. So one is chasing the trend when it's too late. Okay, right. So for YTL Power, this is the nice time to enter. Of course, now you can see that. Okay. So for people who enter now, you better have a good reason to enter. All right, because you can see a good chart pattern or whatever. Right. Yeah. So the common mistake is, oh, you see everyone enter already, you haven't entered, then you feel that, oh, I've missed out, and you jump in now only to see that it goes down after that. So that's jumping in later. So you do need to have good technical skills to see that whether this is a stagnation, just a period of waiting before go up, right? Or is it reversing down? Okay, so you need to have that skills for trend trading. Okay, so that's one of the mistakes a lot of people make. Then another one is, okay, this one like, okay, when you buy or it goes up, everyone is happy. Then suddenly you see it coming down. At this point, some trend trader get a bit panic, right? Then they say, oh, I better sell now. It's going to go down. Only to see you reverse up, and then too bad, you lost your chance. Okay, you want to jump in also, you cannot buy, you cannot find a good price anymore. Yeah, so as trend trader, you need to be very clear of your rules. When do you get out? When do you get in? And if it is not triggering your sell signal yet, have the guts, stay with the trend. Okay, right. So this is the other one. Then the last one is because you are a trader, the more you buy, the more you make. So a lot of traders actually they do what we call over traded. Either you buy too much into this counter or this stock, or you buy here and there and everywhere. You spread yourself too thin and you commit all your money. So that's called over trading. Something happens to the market, then all your position, all your gain is at risk. Yeah, so you do need to exercise risk management. Okay. All right, hang on. Cannot. Okay, sorry. Yeah. FOMO, correct? Yes. All in. Okay, so from Z says all in Nvidia. No, please hang on. Okay, please do the high. Sorry, I don't have a chart for Nvidia now. Okay, but clearly you are trading US market. Yeah, so you do need to take care of take care of what you do with NVIDIA. A lot of analysts are switching their mind. I myself, I'm in NVIDIA also, but I do buy only certain limited units. All right, okay. So anyway, let's look at the even shorter term version. All right, so if you think that months and years before you get out is long time, then let's see. Okay, so now we are going to short-term trading. By the way, all this picture is just the picture of the plant that represents how short. So this one is some vegetable. I understand that vegetable takes weeks to grow. So that's why I use it to represent short-term trading. Right, yeah. So short-term trading is like this. This is the picture for Gamuda. All right, you look at this chart, you see that it goes up to this point, then it falls back down. Then it goes up to this point again, it falls back down. So the next time when it come down here, you can buy. True enough, it went up. Okay, it went up. Then you set or you exit here at this point because this was what we call the resistance in the past. You exit here. All right, so you make your money. So whether Gamuda go up after this or went down after this, you don't care. Your plan, okay, when you enter at that point, you already know this is the place I go to take my profit. So this is what we call trend trader. Whereas the earlier investor and trend trading, earlier the investor and trend trading, they want to hold it for a long, long time, as long as possible as the stock goes up. Swing trader, okay, my apologies. Swing trader here, you don't. You have a definite entry point like everyone else, but you also have a definite exit point. You make this much money and you're happy, you get out, you take your money, you go and roll it to another profitable or another ticker or another stock counter with good chart pattern. So you always roll your money. So you're like a fruit seller. Okay, you buy from the estate or from the farm the fruit. Or then within 1 or 2 weeks you want to sell off the fruit to make your money. Then go and take the money, go and buy another fruit. Yeah, so you roll your money fast. Whereas the earlier one, your money is there while the stock goes up. Okay, so that's midterm trading. All right, so let me ask the question again. So how many of you associate yourself with midterm trading? Let me just copy the question. Yeah, so where's my picture? Yes. Okay, all right, and I will launch the poll. This is my poll, hang on. And poll and relaunch again. Okay, all right. So the poll should appear on your screen now. Yeah. So if you think you're a swing trader, click me. If you don't think you're a swing trader, then B. Right. Okay. Oh, okay. That's surprising. So just now, 40% of you says you're a trend trader. And now I get even more, 50% says you are swing trader. All right. So the number adds up will be more than 100%. Okay, but never mind. No problem. Okay, I will talk more about that, about your identity as a swing trend investor later. Right. So good. Okay, let me just show you the results if you are interested. So share the results. Okay, so you should be able to see. So 55% of you says you are a swing trader and 44% says you are not swing trader. All right. Okay, so anyway, that's swing trading for you. Then let's move on. Now the last one which I want to cover is intraday trading. Okay, now so in intraday trading, things becomes a bit more exciting. Within one day itself, the same day, let's just say for instance, you trade Bursa. When the Bursa market opens, you will look for opportunity. You don't jump in first. You look for opportunity. When you see the chart pattern that you want, you enter. And then when the chart, okay, so in this case, this is also Gamuda, but it was on 3rd of July. Okay, well, very recent, right? So do you see this long candle on that day? And in this long candle on that day, the price within that day itself, so this is the 3rd, within that day itself, the price actually break the previous market high, went all the way up, and then closed at 724. All right, yeah. So if you were watching the market on at that point, this is the trade that you may be interested to get in. Yeah. So enter here, then you get out somewhere. But well, depends on you. Some people get out by lunchtime. Some people stay all the way until the end. It's up to you. There's many different strategy. right? So what do you want to do? You want to profit from large price movement, right? So we call it the price volatility. Okay, now not everybody likes to do this. Why? Because it's very intense. Investors, trend trader, they like a relaxed one. They just look at the market, they decide, they buy, and that's it. They don't care, right? But this one, you can see from the screen here, this guy has to intensively look at the screen. One screen is not even enough. He has 6 screens there. And that's actually very typical for intraday trader. They have all the screens, every single stock that they are interested in, maybe 10, they can see it all at the same time. Yeah, in fact, myself, I'm also an intraday trader. All right, I have how many? I have a 4K screen and another one, 2 full HD screen. So I can see many tickers. All so whatever that shows me the action that I want, I will enter there. Yeah, so this is intraday trading live for you. Okay, now, so just okay, so there's also two main categories. So one of the category is you have a definite chart pattern, and in Beyond Insights, the company which I do the training, we have this strategy called dynamic intraday trading. Yeah, so for that one, you are just like a hunter here. You can see a hunter here sitting down, right? Not sitting down, lying down, waiting for the prey or whatever. So you wait for a specific price pattern to happen. When you see that price pattern appear, then you pull your trigger, you buy or you sell if you short for US market. Malaysian market, you cannot sell short. I understand that. Okay. Yeah. So then, but you don't just open the computer and start buying. You need to do market preparation. So normally, depending on how many tickers you look at, you may want to prepare 1 hour or 2 hours before the market even open. Yeah, then when you buy, you just hang on to it until it shows you, oh, the exit signal. So maybe you buy at this point when you break the pre-market open, the pre-market or the market open. Then until here, when it stagnate, then maybe you say, oh, that's it, enough for me. All right, so you have a clear exit plan. All right. Yeah, so normally most intraday traders don't stay for the whole day. Otherwise, they go crazy, looking at the same screen for the whole day. Right? So they wait for 1, 2 hours, then they make enough money, then that's it. Bye-bye. All right, but they do it every day. That's how they can make money every day. So this is one of the ways intraday trader operate. The other one is called scalping. This one is a bit different. This one is they buy. The moment the stock goes up by 10 cents, 20 cents, they exit. All right. So maybe the stock will just go up like this. Go up a little bit, drop. They don't care. They enter here, they exit here, they happy already. Right. So they make money from very small specific price movement. But the different thing is that after they make money or they trade money, they trade that particular counter, then they move on to trade another one, then move on to trade another one. So they make many, many small trade and many small trade multiplied by the gain, then they make a bit more money. All right. So that's called scalping. Okay. However, this one is actually, even if you think that this one is intensive, because you look at so many screens, this one is way even more intensive. Okay. So why? Because you make money from very small movements, so you have to monitor way more ticker. All right. There's more things to think about. All right. And also, every single trade that you buy and you sell, you will need to pay commission, right? So when you do scalping, you make many, many trade within the day, you probably make more trade than a swing trader make in 1 month for that particular whole day. All right, yeah. So you do pay more commission, all right, more commission for scalping. But it's okay. It's okay if your profit that from your scalping or your intraday actually, is more than the commission that you pay. All right. Yeah. So for this, if you trade okay, I think in Malaysia, the commission are more or less standard. But in US, there's a big difference. So for that one, you normally want to look for brokers that can give you better commission rate. Okay. So that's intraday trader. Right. So tell me, who thinks they are intraday trader? Hang on, let me just see here. Okay. All right. So let me copy this. Hang on. Okay. Now you have A, B, C, D. Okay. Hang on. A, B, C, D. Let me run the poll. Okay, let me run the poll. I'll launch the poll now. Okay. Okay, yeah, you should be able to see your poll. So what are you? Do you think you are a price pattern intraday trader type? You see the hunter here, okay? Or are you a scalper like this? Okay, actually I've not met many scalpers in my career as a trader. More people are price pattern traders. Okay, but okay, or some of you, you are not, but you're interested to learn this. or some of you are happy being a swing trader, investor, trend trader, and then yeah, you don't want to learn intraday trading because it's too demanding. Okay, all right. Okay, you can't see the again. Okay, okay, you can't see the result. Okay, let me just see whether the results are still coming in. Okay, it's still coming in. So let's just wait for a while. Okay, but from the result, what I can see is that there's quite a number of you, some 28% who says that you are price pattern intraday trader. Good. Okay, very few. Okay, which is like what I mentioned. Fewer people who says that they're scalper. Yeah, indeed, scalper is quite rare. Okay, I hardly see any. Okay, then some of you are interested to learn intraday trader. So welcome to the club. Okay, yeah, you can join me. Yeah. Right, and some of you are very happy with your current style. Okay, so you don't want to learn intraday trading. So that's okay, perfectly okay. Yeah? All right, so I can end the poll. I can share the poll result for you to see. All right, yeah. So that's what we have. Okay, all right. So let me move this away. Okay, now, so what's the good thing about being an intraday trader? Okay, hang on. It's right here. Here. Yeah. So what's the good thing about being an intraday trader? All right. You don't have to worry after you exit from your trade. Let's just say, for instance, coming back to Gamuda, let's just say you buy here, then you sell here, okay, or you sell here, up to you, depending on what your strategy is. After you sell here, suddenly if tomorrow the stock actually collapse or fall back down, you don't care. You're already out of the trade, you see. Yeah, so but then for the investors, when the stock goes down the next day, or then they panic, or trend trader or swing trader. But for you, you are really close. You have no more worries after that. Okay. Then also, you get to know the result, whether you win in the trade, okay, the trade was successful or not within that very same day, normally within 1 or 2 hours. So some people they have no patience. I enter the trade, I have to wait for 2 weeks, 2 months, or 1 year to know whether I am really successful in that trade or not, or in that investment. Yeah, so people who have no patience, this is intraday for you. Okay, then what else? Right. Then the best thing is if you have small capital, right, then you can roll your money very fast. Okay, if you have small capital. Why? Because let's just say, for instance, you have a limited capital, maybe you have 5,000 or 10,000. You can use that one to buy. Then when you exit from this trade over here, then you take back your money, right? Then tomorrow you can use that capital, go and buy something new. Whereas the earlier one, when you buy, then your money is stuck there. Even for swing trading, your money is stuck there for a few weeks until you sell. Then you take back your money. In between, maybe you don't have enough money to buy the next one, or you have limited capital. Yeah, so the good thing about intraday trading is you can roll your capital very fast. Okay, so what's bad? Okay, now of all styles, okay, from investment to trend trading to swing trading, okay, or short-term trading, now to intraday. Intraday is the one which is most demanding in your technical skills, chart reading, knowing where to draw support resistance, knowing how to tell whether the trend is still uptrend, downtrend, whether there's any reversal, whether the trend is pausing before it goes up or down. Okay, there's a lot of skills that you need here. All right, if you don't have the skills, then intraday trading is very difficult for you. The other challenging part about intraday trading is your mind control. Okay, I wouldn't call it mind control. Your psychological challenges. Okay. Now, why? Because for intraday trading, a lot of people well, they cannot overcome their greed, so they will buy a lot. Okay. If price goes up, they are very happy. They make money. If price goes down, that buying a lot, many units or many lots of it costs you to lose a lot of money, right? So you must have your predetermined rule. Every time when I buy, I only buy this much. So I lose this much. I win more. All right. So not like, oh, sometimes when you're happy, you buy more. Then if it turned out to be a wrong day or wrong trade, then you lose a lot of things. Yeah. So your psychological makeup is very important. Yeah, so then what else? Then stock selection. All right. For those who say they are intraday, did you manage to capture Gamuda movement on that day? You can type on the chat. Do you manage to capture Gamuda movement? Anybody got this or got this trade? Anybody? Nobody? No. Okay. All right. So yeah, very expensive. Okay. Yeah, correct. It's a $7 stock. So $7 times 100 lots is 700. Yeah. So it's relatively expensive. But that tells you also one thing about intraday. So in intraday, when you have all this screen on your or all this chart on your screen, you need to put the right one. Let's just say, for instance, you go and put Yinsen, okay, and you didn't put Gamuda, then Yinsen doesn't really move that day, but Gamuda move. So you would have missed out on Gamuda already. Yeah, so you need to have a selection. You need to have proper stock selection strategy so that it helps you to find out, hey, what are the one with the big movement, and then you can put it on your screen for you to capture the movement, for you to capture the trade. Is it? Yeah, so you must have the right strategy to help you to finalize or to help you to screen all the stocks with good movement. Right. So these are the common challenges, yeah, that you face, you see. Okay, so like I've said, okay, so many of you are attracted to intraday because you think that this is the way to make a lot of money. But remember, intraday trading is like playing badminton with Li Zijia. If you're good, you beat him. Oh, that's very good. If you are not, he'll beat the hell out of you and you do lose a lot of money. Right. So you do need to have really good skills in technical reading and everything else. Okay, how to expect big movement. All right, so there's many ways, there's many strategies, and depending on which market you look at. Let's just say, for instance, for the US market, which I'm familiar with, all right, we want to look at counters or stocks with news. Okay, what we call good catalysts. Let's just say in US, okay, there's announcement saying that Microsoft is going to have a joint venture with Apple to develop something new, and that news is good for Microsoft, good for Apple. Then you start putting in Microsoft and Apple on your chart. Then you wait. Only when the signal comes out for you to buy, you buy. If there's no signal for you to buy, you don't buy, even though there's a good news. Because there are cases where there is good news, but the stock never move. It just stay there. All right, so that's one way. So that's capitalist trading. Then the other one is, you can also look at the pre-market movement, okay, for US. Okay, in this case, it's for US market. So those with promising pre-market movement, you put it on your screen. Just wait. So remember, whatever you screen and you put it on your monitor does not mean that you must buy. You must still wait for the right signal. Okay. Yeah. So these are the two most common ways which intraday trader do. Okay. So any questions? Yeah, you can type in the chat, no problem. Okay, hang on. Increase percentage is not that much. Okay. Now this is okay. So some of you say, oh yeah, it only went up from $6 to $7, very little money. Yeah. But remember, okay, let me calculate for you. Hang on. Okay, let me calculate for you how much money. How much money is that? Okay, so this is let's just say for instance that you enter at 680, then you exit at $7. Okay, $7 minus 680. Only 20 cents only, very little money. But this 20 cents over your capital, okay, which is the 680, divide by 680, this is a 2.9, nearly 3% increase, okay, or 3% price movement. And that is only for one single day, all right? Yeah, only for one single day. So imagine, let's just say, for instance, you got a winning strategy. So every day when you trade, okay, you got some win, some lose, and all this will add up to make you, to add to your gain, you see. Yeah, so intraday is actually quite profitable. And I have a slide later to show you, which will make you say, wow, okay, it's actually pretty good. Okay, but yeah, I jump ahead of my story. Okay, let me move on. Let me just see if there's anything. Okay, all right. So from some of you, so you are telling me news now. Okay, so Philippines, Sarawak government wants to buy majority deal. Okay, good. Yeah, so put it on your screen, then see whether it correlates to any good price movement or not. So those are one of the ways you can screen for activities, you see. Does Malaysian market offer much trading opportunity from Jason? I guess you're talking about intraday, right? I do have other coaches from our team who do Malaysian intraday. Well, I didn't really ask for their result, but if they are doing it consistently, I guess there's actually activity, there's actually opportunity, and it's actually quite profitable for them. But remember, I've mentioned this just now. So remember this word. Not every day you must buy and sell. You must wait. You must have this. Okay, hang on. You must have this. You must have the proper entry and exit strategy. What do you see before you enter? What do you see? And you must run away and sell immediately. All right. So if you have no strategy, you feel that it's good to buy, you buy. You feel that's not good to, it's good to sell, you sell, or it's whatever. Okay. Then yeah, it's you are going to play against Li Zijia. All right. Yeah. So you must have your proper strategy. So either you learn, you can join us. We are a trading and investment training company. You can learn from us, or you can just learn from YouTube, internet. But those are on your own, right? Yeah. So you do need to learn. You need to practice also. Okay. Now let me just erase this. Then what else? Yeah. So style. Okay. So Sekhon, okay, you have a very good comment there. All right. So I will not say anything until I come to my latest slide. Okay. Well, I don't really know what's NETR projects. So because I'm more of a US stock trader. Okay, but like I've said, no, I didn't say this earlier. But whatever skills you learn is actually applicable to any other market. All right, let me just show you the slide earlier. So you can see here. All right, so if you're trading stocks, you're trading currency, commodities, oil, gold, whatever, anywhere, if your skills in chart reading, your technical skills are good, okay, and you have good how should I say, you have good discipline, all right, yeah, then you can actually apply that to any market. We have students who actually use the skills that they learn from us to trade, no, not gold, I think to trade oil. Yes, we have students who trade palm oil. We have students who trade the, I think, Hong Kong market as well. Yeah, so there's a lot of students everywhere trading different ways. As long as they have mastered the skills, you can apply the skills everywhere. All right. So let me go back to my chart. Okay, so Ashraf, how many charts you put on your screen? That depends on one, your PC, if, whether it's a powerful PC or not, how much RAM you have, and also depends on your program, charting program. So for me, I trade US. My charting program is Think or Swim. I can have maximum 32 charts on my screen, and I use 4K monitor. So that's quite a lot of charts. And I can open a few windows. So I open another window, I get 64 charts. Okay, but normally I stick to 32 charts. That's more than enough to keep me busy. Okay, then what else? Okay, so I can comment. Let me move on. Now, the reason why I show all of this strategy, sorry, all of this style to you is you need to be very clear what is your style. All right, why? Okay, so some of you, you want to be an investor, so you buy. Then the moment you hear some bad news, I say, hey, getting dangerous, I sell off. All right. Or some of you enter as a swing trader, you buy. You think that when it goes up by $10, you'll be taking your profit out, you sell. But then the moment you buy, suddenly the price drop, or then you panic again and say that, oh, now I'm losing $10 really. Then you sell. Right. So these are people, which may be you, right, who are not clear of your style. Right. You want to be this, but then later you behave as that, you see. Yeah, so you have no clarity of your entry, exit, and you don't have the kind of psychological strength to actually stay with your style. Really. So, and what's the problem with that? Why can't you just you think you're flexible? I get in now. I see danger. I get out. No, it will really not work in your favor. Okay, so what's the problem? Because doing this, you will miss out on the big run. So I can draw for you. Let's just say, for instance, stock goes up or drop a little bit. You buy here, okay, you buy here, you're happy. Went out already, drop a bit, or you get out and you say that, oh, luckily I sell. Okay, so you buy here. Then for all you know, after drop a little bit, maybe drop some more, or then went up. You miss all of this already. Okay, yeah. So if you're not clear of a strategy, you miss the big run. All right, you miss the big run. But that doesn't mean you just buy and you hold it and you don't care what happens. No, sometimes it really goes down. And that's where your clarity of your style and your strategy must also include where do you cut your loss. There must be a point where you say that, hey, something is really not right. I need to get out. Okay, so you need to be clear of your style, of your strategy. Then the other one is now, so for those who are even, how should I say, even more jumpy, the moment you enter buy, sometimes the price doesn't come down to your buy price and go up immediately. Okay, it doesn't happen that. Sometimes after you buy, then you will drop a little bit before it goes up. Agree? Everyone agree? So for people who are afraid of this, even more kiasu, then you will incur way more losses than your gains. All right. Yeah. So these are the main, actually the main two issues with not being clear with your strategy and your style. Right. So having clarity in your strategy helps you to make good decision. All right. You don't have to worry every day. Right. You know clearly when you will get out. Right. You know clearly when you'll get out. Say, let's just say, you know, this is the point you get out. Okay. So if it doesn't hit that point yet, you just stay cool. You don't care, right? It gives you, yeah, it lowers down your stress. Okay, you just follow your plan. Okay, no stress. Hit here, I get out. Okay, I know I lose a little bit, but doesn't matter. Out of 10 trades you make, okay, maybe 7 you make. Okay, only 3 you lose. Okay, and 3 you lose. Okay, remember, 3 when you lose, you only lose this much. The 7 that you make this much. So it will way cover. So don't need to panic. Stick to your style, stick to your plan. Right? Yeah. So okay. So now I want to ask you. So I talked about all the need about the need to understand your style, understand your strategy. Right. So I want to ask you a question now. Hang on. So let me ask you a question. Okay, so my question is this. Okay, hang on. Let me paste it. My question is this, and let me run the poll. Okay. Yeah. So who has challenged to understand your style and also not clear, challenge with your strategy. All right. Yeah. So A are people who know you have challenge, but you also know how to resolve. Maybe you stay cool. Maybe you already know the strategy. Okay. Yeah. You just need to manage yourself. Okay. No good. Or you have challenge and you need help. Okay. You will go out and get help. Maybe you go and study more. Maybe you go and join a center like ours where you can learn more about it. Okay, or people who are very good. Okay, this is a nice one. Okay, you are clear of a strategy, you have no issue. You follow the plan and things works out for you. Or you are really newbie, you don't know anything about this. Okay, you have never invested. So all this is new to you. So what are you? So hang on now. So the polls are coming in. Let me just wait for a while for more of your answers coming out. Yeah. Okay, so what I can see is, okay, just let me read it to you. Later, I'll show you the poll results. More people, 43% who voted says that you have challenge and you will get help. Okay, very good. So if you have challenge with your strategy, please go out and get help. And I can assure you, once you have got the right help, things will actually transform for you. But of course, your guru who teach you to do this, you must follow. Don't go back to your old ways. All right. And some of you are confident that you can resolve yourself. So good. Please resolve it. Then you will see a transformation in your results. Okay. And some of you even better. Okay. So that's 18% of you. Okay. 18% of you. Okay. Let me share the results now. I see nobody clicking now. Right. So yeah. So this is a result. So 18% of you say, yeah, you are clear of your style. No issue. Very good. Okay, and some of you, you're newbies, never done this before. Please go and learn from them. You can join our training center, okay, to learn about all these kind of things. You see, yeah, what are the styles? What are the strategy? Okay, so good. So whatever it is, please be clear of your style strategy. Okay, now, so the answer, okay, now I want to address those people with the challenge, okay, A, B, and D, and I'll talk more about how to find what is the style that fits you. Okay, let me show you. Right, so this is where I'll come to this slide. So first of all, all right, different style will give you different rate of return. So some styles will generate more money for you, multiply your money faster, some a bit slower and things like that. But whatever it is, you cannot even look at that. The main thing that you need to look at is how much time you have and how much time you have. Maybe you're a very busy person. You come back, you don't even have time for your children. You cannot expect to do those styles like intraday that demands 1 or 2 hours. Okay, otherwise you will wreck your family, right? So you really need to know yourself how much time you have. If you have time for that, good. If you don't have time for that, you please choose something. Otherwise, you will, well, you mess up your, okay, you will mess up your family, you mess up your career. There are people who spend too much time and trading, whatever, then they have no time for their career. Okay, for us, we have students who spend time looking at the chart at night. Okay, then the next day when they go to work, they have no energy to work. Then in the end, yeah, of course, their career will suffer. So please know exactly how much time you have. All right. Then of course, this time is not only for you to place your order, look at the chart, whatever. You also need to have commitment to study. Okay, when you learn something new, you need to study, you need to do your practice until you're good. So all these are the time that you need to you need to consider when you decide whether you want to do trend trading, intraday, or whatever it is. Then the next one is your capital. So assume that time is not an issue, right? So capital. If you have large capital, then you can go for a more relaxed manner. Maybe it will not generate a lot of returns for you. There will be a steady return, but then with your capital, with the rate of return that it's going to give you, maybe that's enough for your retirement. All right. But for those with smaller capital, right? For those with smaller capital, you cannot afford to put your money, go and buy one counter. Maybe let's just say, for instance, you want to buy YTL. Buy YTL and let YTL slowly grow for the next 3-4 years. You have no more money. Your money is trapped there. Right. So for people with smaller capital, if you have the time to learn some more, I should say, some shorter term trading styles and strategy, you need to do that because that one will let you generate more return and roll your money faster. After you sell, you take more money, go and buy something new. All right. Then the next one is, of course, your objective and expected return. Yeah. So talking about objective, you need to know, okay, how much money, of course, you start off with. Maybe you have 5,000, 10,000, 200,000 or whatever. Then you need to know where you want to, or what's your target, okay, how much you want within how many years. And talking about that, we have students who come to us with unrealistic return, right? Some student, they have 10,000, they want to be a millionaire after 1 year, right? Okay, that's really on the high side, okay? Or some students, they say that I have whatever money, but I want to grow my capital 100% every year. All right. Yeah. So, okay, that can happen if things turns out right for you. The moon and the star all align. But what if it doesn't? So you need to have a realistic expected returns. You see. I will show you the chart later. Actually, not chart, the slide later. What is the typical expected return for different strategy? All right. Yeah. So you need to align all these. Yeah. So let's just say, for instance, I have 20,000. I want to have well, I want to grow it to maybe, let's say, for instance, 1 million within 20 years or 30 years. Then you calculate and see that, oh, is this style the right one for you? Is this style the right one for you? Right. So this is your objective. And the last one is your personality. So assume that everything above is okay. You need to understand different styles also suit different personality. All right. So pacing, the first one is pacing. Pacing means how fast things are. So investing is a slow pace, a lot of time to think kind of style, investment style or activity style. So let's just say, for instance, look at Warren Buffett. He's not the kind of person where he's going to look at the chart and say, okay, I'm buying now. Okay, I won't sell now or whatever. He will take his own time to think and consider whether to do it right or not. Right. Yeah. So if you are one who likes to think carefully, consider every angle of it, then investment style will be the right one for you. You have time to think. If you want to do intraday with that kind of how should I say with that kind of behavior, then you find that, oh, very too kanchong. Okay, I have to decide. I've not even thought about this. I've not even considered this. Or now it's time to sell already. Yeah, so your pacing is very important. Intraday traders are people who think very fast. Yes, buy or sell. Okay, look at the pattern and say, okay, I decide now. All right, which also leads to what I've this second point, decision making speed. And then the last one is, okay, now, so if you okay, certain styles are, well, has more complexity. All right, so investment, sometimes there's more complexity there. you need to read financial report. Or let's just say, for instance, if you're a bond trader or you trade options or warrants, those are a bit more complex instruments. So you need to be able to have the ability to deal with that. Yeah. So think through, okay, think through what suits you and then decide. Don't force yourself to do something that doesn't really match your time, your capital, your target objective, or even your personality. All right. But the most important one will be time. All right. You cannot force yourself. Okay. Now, so if you want to know how to choose this, a lot of website outside also have, well, I would say mini quiz. Okay, mini quiz for you to key in, and then there's a questionnaire you answer, and then they'll say, oh, this is the right style for you. Yeah. So even for us in Beyond Insights, we also have this mini quiz. So you just need to do a search for this. Trading style matching. All right, then you can find our quiz. You see? So trading style matching. Yeah. Right, then you can find the quiz, then you can do it and see whether it matches what you want or not. Okay. Now, but remember, this is just a few question quiz. To really understand yourself, you really need to think. Okay, so just a few questions quiz can give you surface assessment, but not in-depth assessment. In fact, for us, we do have one psychology workshop where we will talk to the students and ask them to fill up a 4 pages questionnaire just to understand better before finding their best match trading style. Okay. All right. Okay, hang on. Let me just move on. Okay, now to the next slide. All right. So this is the returns, well, that based on our experience with our students, what sort of returns that they can get. Okay, now before you get kanchong or get excited about this, please look at this point. Okay, let me just put my arrow here. Okay, one. Oops. Okay, my arrow here. Where's my arrow? Okay, all right. Look at these 3 points now. One is, let's just say, for instance, you want to be a swing or trend trader. Okay, so if you don't have a clear strategy, you have not done your practice, you have not got the correct discipline, you have not got the right exposure, you only started learning yesterday, now you want to make money. No, you will not. You certainly not get this return. So you need to have experience, discipline. Okay, dealing with the market, then only you can expect this kind of return. That's the first one. Second is, now this one also depends on your market. So let's just say, for instance, you want to trade in China market. China market is not really doing very well. Then of course you will not get this kind of return. All right. So Malaysia market has started picking up from middle of last year. Now it's quite good. So I think so the Bursa KLCI over the past 1 year since the middle of last year, I think it has already reached 17% return. So yes, you can. Right. So if you invest in the index here, you can get nearly 17% or even better than that if you pick the right stock. Okay, and then the last one is, this is the performance average over 10 years. So it doesn't mean that every year or every month when you trade, oh, you'll get this kind of result. No. Okay, this is average over a long period, because some of the times, some of the years are good year, some of the years are bad. Like during COVID, those 2 months, it dropped a lot. In fact, Malaysia continued to suffer after that, right? Then last year was a very good year. Okay, since middle of the year. Okay, it was a very good year. Yeah, a lot of US stocks went up. Malaysia stock also went up. But average out over 10 years, yeah, this is the kind of return you get. Yeah, so as you can see here, FD, the reason why you're in this session is because you don't want to look at FD. Okay, you want to look at either investing with stock, investing using swing trading, trend trading, or even intraday. Okay. Hang on. Yeah. Okay, please don't get excited. Oops. Okay, it's US market open now. Hang on. Let me just turn off my alarm. Okay, sorry about that. Yeah. All right, so please don't get excited with intraday thinking that, yes, that's the one that you want. In fact, intraday, like I've said, needs the most mental preparation and also skill. So look at things like investment, swing trading, trend trading as a start first before you decide intraday is the one for you. Okay, all right. Sorry. So I just saw one of the questions. So from asking about momentum trading. Okay, momentum trading is actually trend trading. So trend is actually the momentum. So as you can tell, yeah, you do get good returns with trend or momentum trading. This is the average, the low end of it. But well, most students will get somewhere in this range. And I would say that those students who have learned their lessons and done all their practice, good student, do all their homework, they can actually do way better than any of the number we publish here. All right. Okay. So let me move on. Okay. Let me move on. Just hang on. Let me move on. Okay. Right. Yeah. Okay, I'll just jump this one. Right. So whether you go out and learn from somebody, learn from YouTube, learn from books, or learn from us in Beyond Insights, or even develop your own strategy, make sure your strategy has these three elements: systematic, safe, and versatile. So when we say systematic means there is a very clear, you can call it SOP that tells you this one you buy at this point, you sell at this point. Under these circumstances, you enter. Under these circumstances, you don't enter. This is the number of unit you buy and everything. There's a clear point. Okay, do this, do that, whatever. It must be systematic. Okay, next one is your system, whatever you have, must also be safe. Okay, must be safe. That means during good time, you make money, good. During bad time, you will save your gains from being lost to the market. So you don't want a system or strategy that when you good time you make money, bad time you lose everything and even owe people. All right. So no, that's not a good strategy. And the most important thing about safe is it must protect you from your worst enemy. And who is your worst enemy? Anyone knows who is your worst enemy in investment and trading? Okay, worst enemy. Nobody knows. Your worst enemy is yourself. You must, yeah, the man in the mirror. Thank you very much, Nazirul. Yes. Okay, yeah. So you must protect you from yourself. There must be a clear rule. And the last one is versatile. So when I say versatile means uh, sometimes the market will not always go in the way you want. So versatile means when the market is not doing well, you still have other ways of doing it. All right. Yeah. So you don't want to have a strategy or system where market do well, you make money. Market don't do well, you also lose money. Just like the index. All right. You must have a system that prevents that. And all that sums together will help you. Okay, of course, the psychology is in the center. So I've stressed psychology many times. So all that it must be a system that helps you to sustain all your gains, whatever, and eventually grow your capital. Right. So we call that the SBS framework. Okay, so this is our chief trainer. I'm the senior trainer. All right. So she's of course my sifu when I started learning. Right. So yeah, so we have in our programs, we have all these elements, which you should actually have for your own strategy as well. You must have a system where you know how to select the best stock. You must know how to time the market, when to buy, when to sell, and things like that. You must have a way to protect your capital, your portfolio, and you must have a turbo button where you do this, it can somehow accelerate your gains, you see. So we have many different workshops, and all these different workshop covers different elements of it. Okay, and last one, okay, is now I've mentioned about you being an intraday trader, being investor, being trend trader, being swing trader, as if you have to be this one or that one, but actually no. So many of our students are like this ship. So when you have a big ship, this is the one that is going to take you sailing from Auckland, maybe to Australia or even to Hawaii. Okay, good. But sometimes when you want to visit one nice island, you cannot bring your ship near to the island. Your ship will hit into the ground, or hit into the sand, right? So you need to have a smaller ship. All right, let me just draw for you the smaller ship if you cannot see it. Right, the smaller ship is this one. Okay, oops. Okay, this is your smaller ship. Okay, your smaller ship. Yeah. So you must have two strategy. One is the main one that brings you and grow your capital. And then another one, all right, that when your main strategy doesn't work because the market has gone downtrend, bear market or whatever, this is the one that will still help you to make money. Otherwise, you can only make money during certain market, other market, you just sit down. So that will not be very productive. So you can have two style, two strategy, like one this, one that. Right. So with that, that's all I want to cover. Let me just see if there's any questions. Right. So I've answered on the momentum trading. Momentum trading is actually trend trading. Trend trading overall compared to swing trading. Okay, let me just pull the slide here. Trend trading compared to swing trading actually gives you better success rate. Yeah, so let me put a mark here. Yes, trend trading actually good. Why? Because you stay with the trend. Sometimes when the trend is strong like this, stock goes up, okay, go up, okay. So maybe you enter swing here, all right. Then this is the place you get out, right? Then after you get out, you cannot enter again. You don't have opportunity. But then the trend trader, they stay with this, and overall in the uptrend, they make in the long run more money. In fact, they not only enter, sometimes they even add more position when the stock pulls back to a correction point. Okay, yeah. So those are money making strategies that you can apply. All right, then what is the best strategy for Yinsen? No, the strategy or the style, I repeat again, is actually depends on you. Then only you select the stocks that match you. You don't change your strategy just because you're trading this or that. Look at yourself first. What suits you? Right, then hang on. Okay, so there's another question that says, evaluating your investment timeline, provide example of how different strategy might be appropriate for short-term versus long-term goal. Correct, yes. Yeah, so yeah, if you are a busy person, investing is the one, then you get this kind of return. If this kind of return is good for you, all right, and you want your lifestyle, yeah, then go for investment, right? If you have more time, you want to grow your money faster, you can look at this. And of course, you can look at this intraday as well. So like I said, intraday needs more preparation, more, how should I say, more commitment to learn, to practice. Yeah, but you can look at trading. All right, then depends on your goal. So if so you need to calculate, let's just say for instance, you can take this number, but like I've said, different market will give you different performance, just to estimate whether you reach your goal or not. Or you can halve this number just to be on the conservative side. Up to you. All right. Okay, hang on. Let me just see. Okay. So I'll answer from the last question first. Wave trading, then change to trend trading. Okay. All right. So okay, I don't know what exactly is wave trading, but I can imagine that is swing trading. Okay, hang on. Sorry, I can imagine that swing trading. Okay, now in our training center, we tell students, be decisive. Okay, be decisive. Pick one and stick to it. Some students tell us, hey, I want to enter swing. Then later I see not good. I jump to this one. Okay, or I enter like this. Then I see that when you reach the profit target, can still go. Then I switch to trend trading. Okay, and my answer to them is, even though it may make you short-term more gain, short-term, but in the long run, it really mess up your discipline. You will not be a disciplined trader or investor after that. And like I've said, psychology is very important. Without discipline, you will not do well in the long term. So you're actually sacrificing long-term result for your short-term gain. Don't do that. Okay, if you're in this for long term, you just want to make money and after that, bye-bye, then it's okay. But long term, no. Okay, all right. The last question, 5 to 10% per month. Okay, you're referring to intraday, better than Warren Buffett. The answer is yes, better than Warren Buffett. But Warren Buffett won't do this. Okay, why? Because Warren Warren Buffett does not even look at, he doesn't even have a computer with chart. He doesn't even look at chart. That's not his style, and he's happy with it. Okay, the reason why he's billionaire is because he started off with, well, quite a sum of money, and then he has been in the market for really, really, really long time. Okay, really, really long time. So that's how he can accumulate his billions. Okay, so you do well here, you can actually do very well. Okay, don't be surprised. These are not fairy tale numbers. You can actually do well. Okay, let me just see. How many percent did I do in a year? Now, actually, I cannot reveal that. Okay, one. Okay, they may be, how should I say? Okay, we don't want to reveal that. Okay, one is because we don't want to burst your bubble. Second is because yeah, there are people watching. Okay, so no, cannot say that. But you can actually do well. Okay, you can actually do very well. Okay, do we have a webinar for all the trading strategy exit? Okay, now. Okay, so this from one of you asked, do we have a webinar? So this is actually a Bursa sponsored webinar where we give you overall high level exposure and education. But to learn all this, you need a few days of well, education, training, lessons, and workshop. So for instance, in this learning for our students learning how to invest, it is a 3-day workshop for them to learn how to do the screening, how to know what number or what performance metrics are for company to evaluate, then also to know what are the entry. Okay, so 3 days of workshop plus another 2 sessions of tutorial to know how to operate the platform and things like that. Right, so very good for beginners. If you know zero, join us. You learn the theory, then we'll also teach you how to apply for the account and also how to operate the platform. Likewise for all this, this one is a 2-day workshop, 3 tutorial. This is a 2 days workshop, okay, and 2 days tutorial. This one we have 2 different programs. Basically, it's a 2 days workshop. One of them have a 2-session tutorial, and another one has a 4-session tutorial. So as you can see, it's not only about learning. You must go through, for us, you must go through the tutorial to learn how to apply the strategy into trades. So in the tutorial, you'll be practicing how to place your order in the system, how to run through the same analysis as the trainer for that session. So for myself, I run this training session for the tutorial. Then we have other coaches or trainer who run for other different workshops. Yeah. Is it HRDC claimable? We are applying for that. For now, it's not. Yeah, correct. But do join us. Right. So if you want to find out more about us, you can just go to our website, Beyond Insights. Okay, just do a search Beyond Insights, investment and trading education. And then you can find us. And what else? Let me just see here. Let me see. Right, reality versus expectation. So like I've said, students who have just graduated and they without any practice on their own, they jump into this, you will certainly not get this number. All right, unless the moon and the sun is shining on your behalf. All right, you do need experience, you do need to practice. This is like doctor. You go through 5 years of medical knowledge. Then after that, are you going to operate on somebody? Of course not, right? You still need to go through housemanship to practice. All right. Then after that, then you can say that, yes, I'm a competent doctor. Then even then, if you want to become a specialist, neurosurgeon, heart surgeon, still need to learn some more. Right. Yeah. So this is a continuous education, right? So you learn, you need to apply what you have learned. All right. Yeah. But the good thing is this is way better than your university degree. I mentioned, sorry, Shane mentioned earlier I was a mechanical engineer. All right. Yeah. So being an engineer, you don't really make much as an engineer, but this one, okay, you learn this, it is really worth your time. All right. It is really worth your time. If you spend as much time studying and as much time practicing as you did for your university degree, I tell you, you do very well. Okay, so I hope that encourages you to really put in your effort. Okay, all right, let me see what else. Okay, learn before you earn. Exactly, yes, learn before you earn. All right. Okay, so any other questions? If not, I can hand it back to Shane.
Yes, please grab your chance to ask our speaker questions. Write your question in the Q&A box.
Okay, there's a question from one of the participants. Let me read it out for you. For US market, which style is more suitable and give better return? These numbers are compiled from our students trading and investing in US market. All right, so this is the US market numbers. So it depends. What do you want? Investing in stock. If you're a busy person, investing in stock is the best one for you. Don't look at what gives you more money. No, look at what will serve your purpose and what can actually fit into your lifestyle. You don't want to do this intraday every day. Spend 2 hours preparation, 2 hours watching the market, then 4 hours away. Okay, if you're trading US market, 4 hours looking at the stock and not looking after your young children or your wife. Okay, you don't want to do that. Or even Malaysia market, while you're working, okay, you can curi time when do your intraday trading. No, please don't do that. Okay, yeah, so you must know what, given the time that you have, which one fits you. Yeah, so can you combine trading and investing? Yes, correct. Just like the big ship and the small boat. Investing, maybe you have a lot of money. Okay, all right. So you put inside, you are happy with 20%, right? Let it grow. Okay. But then sometimes when you have free time, You do some swing trade, or you do some trend trade, or even you do some intraday trading, but you must learn them first. You can combine, yes, no problem. Or we have my colleague, which is the coach. His primary style is intraday. Okay, so as you can see, okay, 60%. If I tell him 60%, you laugh at me, all right? Okay, but then he also put some money, okay, into investing because sometimes he's busy. So his investment is still growing for him. And when he has time, then he do his intraday trade. Okay, so you can combine, yes, by all means, big ship and small boat, no problem. Okay, hang on. All right, then from earlier, okay, I missed this question earlier. Can you, for any type of trader, can we move up stop loss to maximize our profit? Okay, now that term to move up stop loss, to us, you move up stop loss to lock in and protect your gain, not to maximize the profit. Okay, so you must be clear on that. All right, and we do that in this. Let me just draw for you. We do that in this one. Okay, this one, investing and trend trading. Okay, we don't change the stop loss for swing trading. Okay, then sometimes, okay, so I'll draw a small tick here. Sometimes for intraday, you do that depending on which particular intraday strategy that you use. Okay, but swing trading, no, just stick with it. Okay, let me see any other questions. Hang on, let me. Right. Okay, then from one of you, is it better for us to have and know our own risk profile before we invest? Yes, you should know your own risk profile. Okay, but having said that, that one is something which mutual fund agents talk to you. Why? Because for mutual funds agent, they expect you to be investing over the long term. Maybe you put in a lot of your wealth with them. All right, so you need to know your risk profile. But for trading and investment, it's flexible. Let's just say, for instance, your salary is 5,000 a month. Maybe out of that salary, you can just one time off, take 2,000. You can do for your trading, and that's it. Limited capital, put a limited capital there, and see how well you do. Something happens with that capital, yeah, and that's it. You just lock away that account, right? But for mutual fund, yeah, I mean, they want you to put in money every month, every year, or so on. Yeah, so that's why they talk about risk profile. But of course, it's good to know. And the worst thing, which is the last thing you should do, is you look at all this return and then you go to Along, or you go to bank, go to your family, go and borrow money. All right, go and borrow money to trade because you think you can make this. I No matter what skill you are, maybe you've done some practice, okay, done some simulation and say that, oh yeah, I can do 30% per year. All right. But then when you go and borrow, psychology comes in again. You are under stress to perform, return the money, and to prove to or whoever, then you don't do well. Okay, and trust me, that is very real. All right. Well, we have seen, and okay, and you can also read from books that there's a lot of traders working for big banks and institutions. When they are working for people, or they do very well, they are the best trader for their institution. But then when they say resign, okay, I want to trade for myself and make my millions, they don't do well. Why? When they were working for others, there is a boss to watch after them, right? Any money they win or lose is other people. So they can trade by strictly following the rules, by using their judgment. Then when they trade for themselves, a lot of panic comes in. Okay, maybe they need to make money to last through the next week, next month. Their wife is watching them every day asking, hey, darling, how much are you making? Are you losing or making money? Or so much pressure, then they don't do well. So at the end of the day, I will stress again, psychology is very important. Never borrow money to trade or invest. Okay, do manage with what you have. Okay, and then one of you says, okay, I won't name why I hear people complain they don't make money even though they are educated people. Okay, let me trust you. And this one you can even read in a lot of psychology, trading, or investment psychology books. Normally, the higher educated, the higher IQ people are the worst investor and trader. Okay, in fact, one who are just ordinary person, don't think much, follow the rules, follow the SOP, or the steps, are actually the better one. Okay, you think about it, right? And we can see that from our students as well. Okay, yeah. So That also tells you that, okay, I'm not a very high IQ person. Okay, then what else? Okay, then next question is DA and FA different between trading style? Okay, so for those who don't know what's DA and FA, DA is technical analysis looking at the chart, and FA is analyzing the company, looking at annual report, looking at all the metrics, reading analyst report and things like that. Okay, in Beyond Insights, okay, in our company, FA, okay, we combine FA and TA over here. All right. So you learn how to use FA and all those things. And in swing trading, FA is important, but once you already know what is a good company, you don't have to think so much about FA. The TA part becomes more important here. And intraday, of course, TA is like the big most important element. Of course, you still need to trade stocks which are good. Don't go and trade the stock which is going to go bankrupt. The moment you buy, they declare themselves bankrupt. Okay, no, don't do that. So you still need to have some sound knowledge of FA, but you don't do that FA analysis so often, except if you're doing investing with stocks. Okay, right. Hang on now, let me just see. Meaning IQ. Okay, yeah, all right. So which software do you strongly suggest for trend analysis? So that really, okay, now for us, we learn in Beyond Insights, we learn to spot trend and to do analysis using our own, I should say, using our own ability. That means you learn how to read charts. There are some software outside which gives you automated or AI trend spotting and all those things. Now, I would say that AI has just started, all right? And give it some time, I have no doubt AI will be smarter and better than human. Okay, but at this point, I think it's better and safer to make decision on your own. Okay, there are people who use AI. So what they do is that they connect their broker platform to those automated trading and then just let go. It's just like you are using a full self-driving FSD Tesla in US and you just let go. Yeah, so your wealth and whatever it buys is all based on that program. I don't have that kind of confidence yet. All right, so I do actually hone my skills looking at the chart. I make decision, yes, buy or don't. Okay, yeah, so I don't use software. So, but then the software that I use are mainly to show me the charts. So for me, TradingView, I think most of you should know TradingView. That's also very popular. TradingView also show US, Malaysia, Singapore, or I think almost every country in the world. It can show you the the stock chart for that. Then another one which is more US dependent is I use Think or Swim. All right, so yeah, Think or Swim. So that one gives me good charting. I can see 32 charts all in one screen. I'm very happy with that. Right. Okay. And the last one is what is my email address? Okay. So if you're interested, okay, let me show you the last screen. So if you're interested, you can contact us. Oops, hang on. Let me show the screen again. Okay, you can contact us in Beyond Insights, support at Beyond Insights. You can find out. You don't need to join our program. We do have review sessions for you to look through what we cover, what we cover and our philosophy to our students. So you can contact us there. Right, yeah. So okay, so software AI is something which I don't trust it. I don't research, but we are going to do some research later part of this year on AI. Okay, right. Okay, I think let me see. What made you change from engineer career to finance investment? Okay, okay. Okay, so even though I studied engineering, but then later I joined a company, a multinational all industry company as a in the supply planning department. So I didn't really do engineering. What I do was I plan for them their production. Okay, how many materials to buy and so on. Okay, so what made me switch? Okay, I have seen my company, which is a really, really big, not Malaysian company, it's a multinational, really big company. Every year, they fire and hire, they fire people. They restructure department, fire people, change GM, fire people, all right, and so on. So one day it will be my turn. So I actually plan myself to leave. Okay, I plan myself to leave earlier and I got my severance package, you see. Yeah, so with that, then I put it into investment and trading. Right. Yeah. So why? Because at the end of the day, I want to take my own fate and my future in my own hands. And I don't want to I don't want to put my fate on someone else's hand. I don't want to be looking to a boss and then wait for him to say that, yeah, you are good or you are not doing well and whatever. Right. So fate my own hand. Okay, let me just see. CPO future up and down. Okay, so I don't look at CPO future. I'm more of a US trader. All right. But like I've said, whatever you learn is applicable to any market. We have students doing oil, doing palm oil, yeah, doing crude oil, doing US, Hong Kong, China market as well. Is bot trading reliable for intraday and scalping? Okay. So there's many types of bot trading. All right. You should be a programmer to program based on your own skill and your own successful strategy. If you just buy something from outside, it is like leaving Tesla to drive for you. Right. So some people may feel comfortable, but I don't. Okay, intraday to look at quarter report. Okay, talking about intraday. Okay, just a snapshot. So we do actually wait for earnings. No, we don't wait for earnings. Earnings trade is one of our how should I say trading timing. So some of us we will wait for the earnings to be announced. Then, if the earnings is very good, then we trade it. But at the end of the day, like I've said, good news, bad news. You still look at the chart to look for the right signal. Right? Because there's many cases, not some cases, many cases where the earnings is good, stock price drop down. Earnings is bad, stock price goes up. It can happen both ways. So don't get caught. Don't think it's black and white. Earnings good, stock price will go up. No, not necessary. Okay, so with that, I think we've come to at 10 o'clock, and some of you may want to get back to your family. And yeah, so I'll pass you back to Shane actually.
All right, thank you so much, Kut, for doing this Q&A session with us. I think could have done a very lengthy question and answer session that addressed all of your questions today. So thank you so much, Kut, for sharing with us what are our trading styles and how do we pick the right one for us. So ladies and gentlemen, you just heard from Kut, who is a senior trainer of Beyond Insight. So thank you so much, Kut.